Yo, today we're talking about the things that you just should know about trading before you even look at a trade. Just things you should be looking for as you come into your chart. So, without saying much more, let's get into the video. If it's your first time to the channel, you know what to do. And besides that, please pull out your pen and papers, take notes. I think it's really important. It's going to help you with your learning curve, and I always say that to all my videos. Um, so, let's get into it. Things that you should be looking for when you come into your charts. Guys, there are a few things, and I'm going to name it out. First thing that you want to be looking at is where is the current trend. Okay. Obviously, I'm guessing you already know what type of pair you're trading or indice or whatever the case may be, what type of trader you are. But when you do come to your chart, the question is who is more dominant in this market? Is it buyers or is it sellers? Okay, the reason why you have to ask yourself these questions is because you want to know who is dominant. You want to know who is in charge here. Is it the buyers or the sellers? Okay, they can't both be in charge because if they're both in charge, then we will have a range, right? Meaning the market is just moving sideways. It's not going anywhere. So you want to identify the trend when you come to the markets. The reason why it's important, like I said, is just so that you can identify who which bias to have when you do come to your charts. So once you have identified who the dominant side is, which one is more stronger, whether it can be buyers or sellers, what you want to identify is what phase of the market is the market in. So like we have seen from my previous videos, I'm just gonna go through it again. You have, for example, if we are more bearish than we are bullish, meaning we're just selling more than we are buying. What you want to identify is the phase of the market. Is the market currently pulling back? Where obviously we're looking then for the market to retest this level and then a continuation is our anticipation. Or is the market currently moving towards the downside within this overall down movement? Is it currently moving towards the downside? Because if it is moving to the downside, that basically implies that we are in a push phase. We could then be expecting a exhaustion phase before we can continue pushing towards the downside. So number one is what trend are we in? Is buyers more dominant? Is sellers more dominant? Once you have that, second question is what phase of the market are we in? Once you've identified the phase, whether we are in a push phase or an exhaustion phase, what you then want to ask yourself is where is the most recent support or the most recent resistance? Or the closest support and the closest resistance. The reason I wanted to ask yourself these questions is because you want to identify where the pivot points are going to be. Remember, in a downtrend, the market pushes towards the downside. Okay, then it creates a pullback. Okay, and then after the pullback, we're anticipating a continuation. However, the market is not just out of the blue for some reason. It can happen, but it's not just going to decide all of a sudden I'm going to turn up here and do this and that and then suma. You know what I mean? Like it doesn't just all of a sudden, there's pivot points in the market where the market has these bounces happening. Okay, so you want to ask yourself is where is the most recent support or resistance? How you can identify that is basically looking at your charts, seeing areas where the market had previously pivoted at. So previous pivot points could be like here, because when the market came into this point, it bounced up. So we're gonna mark this out as a potential pivot point. We're gonna call this our resistance, okay? And then if you don't have any data right here that can give you a support, you're then gonna look towards the left, and literally, I mean the most recent structure that you can see here towards your left hand side. So the market could have been like this. Let me just say so, like so, pointing towards the upside before it started coming all the way down. Okay, before coming all the way down to here. So it could be previously moving towards the upside and then it hit the range and then it started, pivoting towards the downside. Now, if you do come to your chart, remember the first question is who's more dominant. As you can see, currently we are more bearish, we are more selling. The power is more towards the downside. And then once you have that, you want to ask yourself, what phase are we in? Are we in a push phase or an exhaustion phase? In the situation, we're in a push phase. What are we anticipating? We're anticipating a pullback. Okay. Third question is, where's the most recent support and resistance area? So you're looking at charts. If you're gonna see yourself in the push phase, where you're gonna say to yourself is the most recent, um, currently in this downtrend, the most recent support that got broken is over here, of course, because this was a recent area where the market came and then all of a sudden bounced up like here. Okay, so we're gonna mark this level. This is the most recent. Okay, based on the data that you have in front of you. Ask yourself where is the most recent. That's important. Now, if you don't have any sort of market structures that is recent on towards, like like right here, you can just look towards your left, and I literally mean the most closest support that you can see. Okay, so let's just for example, this is most recent level because the market is currently trending here. So you want to see what level towards the left is close to where this market is at. Okay, where the market had pivoted in the past. So as you can see, when the market did come into this area, okay, it bounced up, touch, and then all of a sudden it pivoted up. Okay, so we're gonna mark this area here. There's a potential area where the market can then bounce off of. Okay, so that's how you draw your support and your resistance. If the market does happen to break this level, that means we of course are continuing in a push phase. We can look for a retest of this level, continuation. But let's just say, for example, the market had broken this level, coming to this point. Basically, how you trade is you want to mark these two levels, and then you want to trade within these two levels. Okay, I don't think you understand, but you want to trade within. So if you're going to take a trade here, okay, it's not going to be based on just entering. You're obviously going to look for the market to come into structure, start giving you weak rejection candles, starting to create smaller, what I call ranges or consolidations within that box. And then from there onwards, you can scale down to smaller time frames to take advantage of that break of that range and a retest in anticipation of continuation back to the upside. So it could be mouthful, but just watch the video again. I'm probably sure you're gonna eventually start picking up on it after repetition as well. So you're gonna take your trades within this two level. This is how you come to conclusion of taking a trade. Okay, I just took you through to the conclusion. So number one, what trend is it? Okay, the current trend. The momentum is pushing towards the downside. Second question is what phase are we in? Are we in a push phase or an exhaustion phase? You know what to anticipate when you have a push phase, you're anticipating an exhaustion. And if you're in exhaustion phase, you're anticipating a continuation back to the downside. Okay. Once you have that second question answered, third question is where is the most recent support and resistance level? I just taught you how to identify this. If you don't understand, just go through the video again. You are going to pick it up. Where is the most recent support and resistance level? You mark that two level out. Fourth thing that you are going to do is you're going to look to take your trades within those two boundaries. Not you trying to be the I don't know what. You can see that the market is pointing towards the downside. You can also see that we are currently in a push phase, and then all of a sudden you also identify that this is a potential support area. Okay, and you also identify that this is a potential resistance area, and then you still decide that you are going to sell this market even though you can see that you are in a push phase. You can't say, for example, we are in a push phase within a downtrend. You cannot, you cannot within a push phase in a downtrend sell the market because the market has already pushed, meaning eventually it's gonna need to hit a support in order to pivot back to the upside in anticipation of a continuation. And I hope that makes sense. So you literally cannot do that. You can't, you can, I mean, you can, anything is possible, but it's not sound of someone to just sell the market in the push phase. Same, you don't want to be buying the market or you don't want to be selling the market. I mean, you want to sell the market after the exhaustion phase has happened. That's the only time you want to sell the market. So if you're looking to trade with a trend, the only time you want to sell this market is when the market has exhausted, go back into that potential resistance area, retest that area in the anticipation of continuation. In the same way, if you want to buy, then I'm assuming that you are a counter trend trader. You can then look to take a buy up here. Of course, it's a support. Market is pushing towards the downside. That's your confluence. Hitting a support. Market is rejecting third confluence, fourth confluence. Once it has been rejecting smaller, you scale down to a smaller time frame. And then the fifth confluence is look for your patterns. Break of that range, retest, continuation back into this box. We are going to exit in anticipation of a continuation back to the downside. Okay? That's basically how I come to conclusions with my trading setups. Okay, so we can just go through a live. I'm gonna call out the trade on the live chart. So based on the current sentiment that we are seeing, we are gonna see what we can call out here. Okay, so I'm an intraday trader, which basically means I come into the market, I want to identify again, number one, we're going to go through the whole process. Number one is who is currently in control. And as you can see, currently we are pushing towards the downside. Okay, we're creating load, retest, okay, double top, continuation back to the downside. So currently we are more strong pushing towards the downside. Yes, we are creating the small movement, but the overall momentum is towards the down. Okay, so the first thing you want to do is identify the trend. And as you can see, currently we are pushing more towards the downside. Forget this data here, guys. Okay, second question, what phase are we in within this downtrend? As you can see, currently this phase that we are in is an exhaustion phase. Why? The overall momentum is pointing to the downside, and currently we are moving back to the upside. So this is an exhaustion phase. Okay, so that's the second question. Once you have an exhaustion phase, by the way, this is live. I'm recording this video on a Sunday. Probably gonna upload it today on Sunday. So if you're watching this could be. I'm not giving you a trading signal. I'm not a financial advisor either, but this is me calling out the trade. This is how I come to conclusion of a trade. So we identify the trade trend. Now we have identified the phase. Now the third thing we want to ask ourselves is, where is the most recent support in the resistance area? All you're gonna do is look for pivot point. Like I said, as you can see, when the market did come, okay, when the market did come, it bounced once, bounced second time, bounce here as well. It did a small pivot here and then continued down to the downside. So as you can see, the most recent pivot point could be in and around this area here. But I'm gonna mark this whole level, okay? Because that's where the pivot point happened. And what we're looking for is that when the market does come back into this area to give us our potential. Okay, so wait, I'm going fast. Now we have our pivot point, okay? And then we also have our pivot point at the bottom where the market came and bounced off of. So now we have the opportunity to trade within this two range here. Okay, obviously with an exhaustion phase, you are looking for continuation back to the downside. So now you have identified the trend, you have identified the phase, you've also identified the resistance and the support area. Okay, fourth question is yeah, so the fourth thing is, you want the market to come back into this area. Of course, the anticipation market is going to continue going down. You want it to come back into this area and start giving you rejection candles. Okay, so once the market comes to this level, currently we're on the 4 hourly chart. I'm gonna go scale down to the 1 hourly chart. What you want to see the market do, excuse me, is to see the market come back into this level, somehow just start failing to go higher. It's trying its best, but it can even go do this. It's just failing, man. It's trying its best and it just can't. That's a signal that the buyers that are currently in charge are starting to exhaust, and that could be a signal that buyers are stepping out, and at this level is indeed strong, and it is holding up as a resistance, and that sellers could potentially step into looking to step back into the markets. And then what's going to happen is you're going to go down to smaller time frame once you have those rejection candles, and within that rejection candles, if you scale down to smaller time frame, you will see it as a range. Okay, so in a smaller time frame, for example, on the bigger time frame, you're going to see something like this. All right, you're going to see this type of candlesticks here. That's just, let me just say, small body with big wicks. Okay, so you're going to see this. Okay, and perhaps, you know, you're gonna see bigger wicks, smaller candle bodies, and basically you wanna see a lot of it. The more the better. Okay. But even if you get like two is fine. You scale down to your 15-minute chart. This is an hourly chart. You scale down to your 15-minute chart. If there's one candle that you got, or even your 5-minute chart, this rejection candle is gonna look like a range, meaning a side moving market, meaning the market is gonna look like this in a smaller time frame, which is a good thing. Now, what you want to see is not just jump into the market because the market is giving you rejection candles. You want to see the market in a smaller time frame. This is now what we call patterns. You want to see the market starting to transition, okay, to transition from this up movement up here, okay, into a potential downtrend. So within a smaller time frame, you want to see the market starting to create lower lows, lower highs, and that's going to now give you signal that the market is starting to transition from this up movement into this resistance into a down movement, creating lower low, lower high in your smaller time frame. Then you can look take a trade. It just, for example, does do this. I could look to take a trade here. Okay, I just I take it here. Stop loss above structure, always as our trade. And then I can go for my target anticipation. The market is going to continue going back to the downside, like so. Okay, back to the downside, even if it's a continuation. Obviously, you're gonna have to have management levels, which could be here, where if the market does come back to this level where it pivoted before, it could potentially pivot again. Okay, so when the market comes to this level, you can wanna then start taking profits off, break evening, not even break even, just taking the markets. Break even, you're probably gonna do like somewhere here, as the market is trading like in this points here where the pivot points are. You break even your trades. But when it comes to this level, you can start to look to it, maybe take some position off if you did enter different positions, take a few positions off, or trailer stop loss, whatever the case may be. And in anticipation, the market is going to continue going back to the downside because the overall momentum is towards the downside. Okay, hope it makes sense, guys. Um, so that's how I come into conclusion and I'm looking for my trades. So hope that helped. For those of you guys who do not understand, look, you're not gonna pick it up on the first go, especially if you starting out. A lot of repetition has to go into this. You have to backtest these things. You have to personally see how it all works. Obviously, these videos that I'm making is helping you to learn, to better your learning curve or to fasten it up. But at the end of the day, it's the work that you put in that's really gonna matter, and less of what I have to do. I'm just here as a messenger, basically telling you what I see in the markets, how I see it. And at the end of the day, as much as I'd like that you do learn from it, obviously you are. It's much better when you personally do, do some due diligence and do it yourself. Go home, just check out the charts, do some back testing, take a few trades on your demo account if you have to. Not that I'm a supporter of demo trades. I believe just going live one time, you are going to learn much faster because it's real money, real emotions. You're going to learn so much faster from yourself. Obviously, I don't mean like go and put the whole 20,000 bucks in there or anything like that. Nothing major, just something small, like even if $100, just so you can get the feel of what it feels like to trade, the emotions that run through your body, how your body reacts when you take a loss. Um, the psychology of it, all those type of things are just gonna, starts happening much faster. Whereas if it's demo account, which is not real money, you're just gonna be trading out of basically fun. And if you do take trades, you're gonna wish it was real money. You know what I mean? Like you're deceiving yourself, which is not cool. Um, but yo, man, enough from our side. Hope you learned from this video, man. If you did, man, smash a thumbs up. Subscribe if you haven't subscribed, man. Stay tuned on the channel. We are gonna definitely upload more videos. So stay tuned, and until next time, I will see you on the next video. Cheers. Take care.